As far as tax planning is concerned as well, on the estate and gift tax exemptions, the federal estate tax exemption is now up to 15 million per individual, 30 million per couple. So that just essentially was indexed with inflation. Maybe it went up a little bit more, but keep that in mind. And then so that's just something to keep in mind for, like, when if you have a net worth above 30 million as a couple, go do some tax planning with some estate planner and a financial planner and an accountant. And if you're under that amount, you're good to go.
Yeah. I mean, but that is major legislation because, we look at where it was just a short 20 years ago, and this is where it really made a difference. Where if it was above, well, it was just above 500,000, maybe 675,000 for a couple.
Yeah.
They had to pay estate taxes, which are enormous, right?
Yep. 45%.
Yeah. And this is getting a little off track, but we've worked with couples in the past that actually haven't had their estate plan really revisited or modified since the TCJA or since legislation changed. And this is where it's really important with major legislation to see, hey, with these new tax laws, with these new exemptions, does my current estate plan still hold water? Do I need to still have an AB trust? And that's getting way too deep in the weeds here, but it is
smart.
time just to be able to look at it and say, hey, let me take that back to my financial planner or my estate planning attorney and say, hey, is this still the most recent version that we should be using, or is it time to update it?
Absolutely. Another thing that will affect deductions. So we had that standard deduction now went up to 31,500 for couples, but for folks who are still working, more than likely still working, or in a very high tax state with still a sizable mortgage, the SALT deduction is coming back. SALT stands for state and local tax deductions. With the TCJA, we were limited to $10,000 to go ahead and write off. So we had higher property taxes or state income tax. We didn't get to write off very much federally. That has now been increased to $40,000 through 2029. So it's not forever. It does have a limit, but it is $40,000 through 2029. And it does phase out if your income is above $500,000 for a couple or $250,000 for an individual.
Right. And that's moving from $10,000, which we know it was capped at for a very long time, to now that $40,000. And, much like the super, I call it the bonus deduction that we just talked about with seniors over the age of 65, it's going to be phased out. So this is where, with these next couple of years, it's so critical to see, and especially we like doing it with our clients in the middle of the summer, now that we have the new legislation, to say, where does this put us at the end of the year? With SALT deductions we have through 2029, are there things we should be thinking about now over these next couple of years that we can have a larger return and use that to our advantage?
Yeah, absolutely. Yeah. Those were the biggest changes that we saw. Another thing that I would add, if you were thinking about buying an electric car or thinking about doing solar, a lot of those clean tax credits are going away. And they are getting phased out this year. Some actually think are getting phased out during the year, but certainly by the end of the year, they will be gone. So if you'd been on the fence about getting that EV or doing that solar project, go take a look and see if those benefits still exist for you this year, because in 2026 and beyond, they more than likely will not.